Thank you for joining me. I'm Alex, and I want to talk about Revolve today. So, Revolve is a company that Jeremy mentioned on his channel, and it looked very interesting at first sight. And so I figured I'd make a video on it as well. Because I think that Jeremy is looking at a lot of stats that don't really influence my decisions at all, and I'm really more into looking at the fundamentals, looking at the financials, looking at where the company is going, and not at what kind of sales they make, what the basket size is, and how many customers they have, because none of that really matters a whole lot to me. So what they do is they do e-commerce, mostly apparel, obviously accessories and other stuff, but that's the main thing. Current price is $19.31, which gives them a market cap of $1.4 billion, so it's a fairly tiny company comparing to the stocks I usually do. Obviously, $1.4 billion is not nothing. Dividend is zero. I don't expect that to change in the next decade or so, so don't count on that changing ever. Revenue $600 million, up from $500 million, so good 20%, not bad. Earnings $35.7 million, up also almost 20%, so not bad there either. PE 39, forward PE of 21, which is for a growth-ish company, pretty amazing to have a forward PE of 21. There's companies in the 40s, 50s, 60s, 80s, and then there's Netflix. Anyway, so forward PE of 29 for a company that's growing at a 20% pace, not terrible. Obviously, going from a PE of 39 to forward PE of 21 means that they're almost doubling their earnings. So obviously very good indicators there. Total assets $232 million, up from 162. That is very significant. Total liabilities $102 million, up from 82. That is reasonable. And total stockholders equity is 131 million, which increased 50 million over the previous year. So very good growth there. Very good indicators that things are going in the right direction. And overall, it looks like the company kind of has their stuff together and is kind of moving as a whole in the right direction, which is obviously a very good thing. Now, overall, I would say that obviously dividend investors are just out. For a value investor, I think the PE is still too high. If you're mainly investing into established companies with a good balance sheet, with good earnings, with a good PE, I think that you're just going to have to sit this one out. But for a growth investor, I think this company makes sense on many levels because revenue and earnings are growing 20-ish%, which is great. The PE is actually pretty low for a company that's growing this fast. And the balance sheet is decent. They're actually making profit, and things are overall going very well for them right now. The risks with this company are that it's obviously fairly new, and it's not well established. It doesn't have name recognition, and it's a very high priced retailer. So I would say that if there were to be a recession, and as you can see up here, the sale is continuing in the stock market, and you can get some serious bargains there. Lost 3.6% yesterday, lost 3% today, so that's over 6% drop in 2 days. So that's the market as a whole. So obviously there's going to be some bargains going on right now. And amazingly, this company is up. So if there were to be a recession, and as I just pointed at the numbers, the stock market did drop fairly significantly, and we might have some more worries if the coronavirus is not going away quickly. That might change things significantly, and I don't really like where things are going with high-priced retailers of luxury goods. Um, so you have things that are not strictly necessary. You have things that could be postponed. And so I wouldn't really like them in a recession. But with that said, I think that them making a very decent profit right now, being able to probably cut some costs if things were to go south for a while, they might very well live through the recession and come out way stronger. And so that would obviously help them a whole lot. That said, I think that the stock could be very volatile, so you might have to deal with a bit of a rough ride there. But overall, I think that if you are interested in a growth stock, you are well diversified, I really wouldn't mind throwing that into the portfolio and kind of looking where things are going. Right now, everything seems to be going well. And there's no reason that that shouldn't continue. So, for a growth investor with a diversified portfolio, throw it in there. Obviously, do your own research, but have a look at the risk factors, the competition, and the outlook that they posted, and kind of go from there. But overall, it seems very solid. So I don't blame Jeremy for buying the stock. I'm not buying it, but I'm not really a growth investor. I'm more of a value investor interested in the fundamentals. So that's it from me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.